What's up, guys? So today what we're going to be talking about is wicks in charting in general. So you can apply this to cryptocurrency or stocks or anything in general in charting, prices. So when I started off stocks and charting back when I was a kid, I didn't know how candles worked, what they mean. These bars, I kind of looked at it as lines. Just a normal line that we see on stock graphs all the time. But I think anyone that's in the beginning stages of cryptocurrency or stock trading in general should learn something about this. Now, each candle represents a time frame. So, for example, right now we're on a 45-minute time frame. Let's say I change it to a 1 minute time frame. Now, for 1 minute, you'll see candles that are moving really rapidly and really quickly. For example, this one right, see how they're kind of moving about now? Um, so what I'm going to do is I'm going to change it to a 5 minute time frame instead because these things are really volatile. So for example, right here we have this candle over here, and you see here that the time frame is 1620. So this means that this candle starts off at the 16th hour and the 20th minute. But if I move over to the next candle, you can see it's 1625. So that candle starts at the 5 minute mark. So what that means is this closing right here, uh, let's say for example this one right here, the price started off over here at 1605. That's the time where this started off. So it kind of started off over here. So it rose so high, maybe it bounced back, and then it went so high that it went over here up to about 1610. So as soon as it was 1610, it moved on to the next candle. So this was basically closing at a 5 minute marker. So after 1605, it becomes 1610, and it opens exactly at the same position. Now, what are wicks? Wicks are fundamentally, for example, this one right here, it opened here at 1610. So what that means is maybe it went down. It went so down that it touched this point here, and then it went up, and then it basically covered this part, but it went down, but it recovered quickly. So technically, you can think of it as if it didn't really go down there. The real pricing wasn't there. And then it kind of went really high, and then it went a little bit down, created that wick, and then it was kind of fundamentally uh, rising up and down here. And at 16th hour, 15 minutes, because this is a 16 hour 10-minute candle, it started at the 10-minute mark, it closed right over here. So we can see that this wick over here was something that it kind of went over and it came back down, and this one was, it went down and it went back up. So here you see the starting point. So this is pretty much the marker. If it went down, it was a red candle. If it went up, it was a green candle, just relative to this one. Now over here, we can see it went over here. It started, it went so down, it was really red, but it kind of recovered back and it closed over here. So that is why it's red, because it went down from the opening price. This opened at 1615, it went down, and it went so down, and then it went back up, recovered a little bit, and then stopped over here as soon as it was 1620, the 20th marker. It stopped here and it moved on to the next one. So likewise, we see that here. And we're currently seeing that right over here right now. We're see how it kind of opened here. See, it went back up and now it's green, and we'll probably see it either go down red. We'll see what happens right now. But yeah, basically how it went down really quickly, it became red because relative to this price, the opening price at what time it was, 1620, it went back down. We see over here how much time there is left on this candle. So approximately 3 minutes left. 3 minutes left approximately to this candle. So if this candle closes just like this, then it will move on to the next one and it'll stay like this, and then the next candle will start relative to that top part. Now, it just went down based upon this one, so that is why it's down. But yeah, that's how candles work. It's very, very easy to look at candles, and they're great indicators because you can see support lines. So as for example here with Bitcoin, you can see how it went down and went up, and then these are supporting indicators. This right here, this long wick, it really didn't sustain itself, so technically you can see it as if this is a very, very strong support line. So as the price goes so down, this part right here, is going to be a very good support. If it goes lower than this is getting stronger. However, we'll see that it may really quickly recover back just like it did here. And you can apply this to many times in the graph proceeding backwards.